Hi everyone, November the 18th today. My name is Anne-Marie Band and this is the Moneyball Morning Report for the Benzinga Pro platform. Taking a look at this move, and we can see it also on SPY, I'll show it to you, but for those of us that are involved in the futures, we've moved this wave up, so we've got a half back, and that's going to create a bounce event. Yes, 50 is not a Fibonacci. We're not thinking about things in normal Fibonacci's. Remember, we force order onto the market by our actions, okay? We force the order of downside motion and we force the order of upside motion. And traders, I'm going to tell you, we're simpletons. And so 50% is what we are looking for. And notice it sliced right through that 50% on Friday, started bringing it back up. This is very likely to be a buy the dip day. What is that formation likely to do? Two things. Bump into resistance, 59.15, all the way to the 50% range of this last wave event. That brings us to 59.30. Dips are going to be buy zones. That means 58.80 to 58.90, going to be that buying area. If we lose that, or if we're caught in a range here doing some consolidation, we wait it out and we trade the range. Right now we are well below, the pre-market highs, right? That's 59.16 or so. We break out there, it's off to 59.30. That's what the price action is telling us, and this 50% halfback is going to show us what we need to do. Pay attention to those levels. It is a buy the dip day unless we lose 59.80. Here's the wave action. Let me make sure. I'm going to remove this fib. We'll draw a brand new one. Here's the 50%. Here's that high. 50% is way up here. So what it tells us is that for the NQ, it's given back a little bit more, struggling to get over that 50%. That's a tell that we're moving at a different rate than the rest of the market. That is not tech heavy, but it is still a buy the dip. Here's the difference. The fade all the way down to 20,421. However, if we hold this 20,600 area, it is going to give us a little bit more buying pressure. Right now, we see a fade. Traders are trying to get back into the space where everyone agrees on price. My thought is that it's very likely that opening candle high down there at 20,490. That's where I'll be looking for a buy zone. Notice it's about half back from this area. So here's what we expect price action to do. We expect it to come down here for sellers to go, ooh, this is broken. I'm going to take it back down into 416. And so let them do that if you're looking for a long. And then if it stabilizes here at 20,416, 20,440, that's when you take that dip buy. If it holds, 500 will become the floor, 610 becomes the break, 660 to the upside, and then we've got liquidity markers all the way up into this box, way up here. All right, NVIDIA on the docket. I don't know if NVIDIA is going to do, well, whatever it's going to do, right? But fade action, the real breakaway, folks, is here. Going to move it down at 20,245. So we've got very big steep motion. It's telling us that we're near the halfback area, so we need to recover. And so that's what they're going to try to do. NQ is going to be super sloppy to trade today, but the deep dips should give us more buying pressure. All right, let's do this wave. I'm going to remove this fib. We'll draw a brand new one. See what we get for a halfback. Halfback is not until down here. So YM outperforming both the ES and the NQ. Okay, this halfback motion tells us we're still in the midst. I overlaid this box here, this one, simply because these halfbacks and I'm just saying 50% down, 50% up, they're moving. Here's the thing, folks. We've seen no reversal pattern here. Do I think it's coming? Yes, I do. Do I know where it is? Of course I don't. I have no idea where it is. No idea at all. But if it's going to follow the rest of the market, it's going to hit this 50% way down here and then turn around. If it's behaving better, it's going to hold these areas at 43,536. Otherwise, 43,208 is going to become the new floor. This formation says, listen, sell the bounces until we stop making lower lows on these hourly charts. And that's going to mean 43,639 gives us an ideal short. If we double bottom at 43,400 and we start to hold, you could nibble in there, but momentum, it's in the gutter. All right, so be very careful thinking that the YM is going to move in that general direction. We'll look at the RTY also very quickly, see what its halfback looks like. You know, my thought is every new bounce in the RTY needs to be sold. But here we have halfback. Can't make this stuff up, folks. It is wonderful to see things move like this. Halfback up over the edge. This is showing by the dip. Unless the floor of the New York opening candlestick gets broken at 2305, at which point, if we're looking for longs, we've got to step out of the way. All right? Because liquidity below sends us into 2263, 2264, somewhere around there. This is a buy the dip. Where are they try to get back to? Value area low. Also, halfback of this general box right here. And that's going to give us 2350. Let's take a quick look at oil. Saw a really interesting post from Peter Brandt. He was talking about a breakdown in the structure. Let's take a look at this one. To me, my premise has always been, listen, this new administration is very keen on energy, and if we put money into energy, it's going to be more money in the sector, going to give us lower prices in energy. Who doesn't want those? All right. So 1618, 62 on the floor, and then 60 below. But what are we looking at right now? Buying the dip. Traders are very keen on buying this floor at around 66. Both Coach Jay and I were talking about this number last week, the 6680 zone. Look what happens. It drifts below, but as soon as it recovers, becomes a buying floor. All right, is this messy? Yes. Where are they going to? Resistance. Where is resistance? That zone, if we use a simple trend line, that zone looks like it's about 68. It's also the volume point of control. Dips are buys as long as it holds 66.72. If it doesn't, we do this wave formation where we're trying to break. And the first line in the sand, you know what? Let's change this to 150. 65.72. That's where that's going to come into. All right, quick look at gold. Wrong contract, Danny. Sorry. All right, here we are. Big move. Take a look. If we take a peek, I don't know what the floor is there, so I need to move to a 4-hour chart. That'll give us a better look. Breakaway formation 25.35. We just bounced off of it last week. That's very interesting. That is very, very interesting. Let's do it where all the liquidity was sitting. Notice, if it breaks below, that's why you don't get the trade on the way down. You get it on the way up. And if it pulls back and holds your floor, you know the risk and you can take the trade. Value area low, 2607. Guess what? 2627, a big number. Many of us have been watching. That's the area that this chart could easily collapse. It's sitting in a zone. That zone says I could pull back. Why is it not remembering that number? 2522. There we go. And if not, here's the last time everybody agreed on price. All the way down in this big box here. Up at that 2630-ish zone. All the way down to 2479. That's the last place we really agreed on price near what we're staring down. All right, quickly, SPY. Let's go to the 1 hour chart, right? Let's do the wave. Low, high. Here's the 50% zone. We're running hot. Where should we go? Top of the box, 590. This is a buy the dip zone as long as we hold 583. As long as we hold 583, it's going to be a buy the dip. So you know where your risk is. You know absolutely where your risk is. Could you get shaken out? Yeah. But you know where the risk is. So my thought is wait for the fade and then take the trade. Qs. I'm going to remove that one. Let's do this wave. What is, here's 50% right here at 499. That could end up being resistance for this one. It really, really could. So if you're looking for a buy, the Qs have said buy the dip, but the floor is still 492 to 494. That's pretty wide. All right. Take care, folks. Listen, could be a sloppy couple of days as we do some digestion. Notice, move up, digestion. Move down, digestion. Anticipate it, but also anticipate that there are buyers waiting below because there are a lot of people thinking we're going to have ourselves a Santa Claus rally or a December rally into the end of the year. The big force of motion is going to be on the back of the buyers. Can they do it? If they can't, we'll lose the floor and we get ourselves more downside action. This says sell the bounce. But because we're in a basing formation, if you do sell the bounce, wait up here, know the risk. Go up here, wait for it to collapse, and then take the trade down. We don't get to be heroes staring on the front line. Our pockets are simply not deep enough. All right? Be careful. And I'll see you on the streams today. We'll have our Zoom meeting for the Benzinga Pro members, and I'll see you guys on Strategy Lab later.